All right, let's jump into things. Where we at? It is 10:43 on the 20th of January. So look, just a quick look over the charts. Not really too much more to report on things at the moment because of obviously the US holiday overnight, which it doesn't always guarantee that it's just going to be absolutely dead. But it was Martin Luther King Day, so maybe I'll sort of note down which holidays seem to sort of hold a little bit more volume and which ones just seem to go dead as a doornail. But look, just a sort of little recap, we obviously had that sort of Greenland sort of issue situation that pop up over the weekend. Saw a big jump in the metals straight off the bat yesterday. Fairly short-lived though. This is on a 1 hour, and you can see pretty much, after the first hour, like it gapped up and opened, I don't know, around this point here. This doesn't show the gap on it. But, after the first hour, it kind of just really hit itself a range and more or less just sort of just moved sideways since. So we did have a little bit of a potential triangle breaking out there, but doesn't seem to really have done much. So I'll sort of update this a little bit. Say, it could be a little bit of a pennant moving up over here. Obviously, we're only just into the day, so 40 minutes into this sort of new session. Gold sort of, not really doing anything. It's not a great deal to report here. But the point is that sort of like the reaction that we got from it is pretty much textbook what we could expect, given the sort of action we've seen around any sort of mention of tariffs and that through so 25. So, the fact that it popped up here is no shocker. The fact that it sort of hasn't continued through means that there is the possibility for it to come back down here a little bit. Doesn't mean that, okay, the whole move's failed, but certainly if you want to get long, it's tried. Here's, this is an initial pop, second push, third push, fail, fail, fail. It's into a little triangle. Really, it's just consolidating. It's consolidating at the highs, and consolidation favors continuation. So more upside is probably sort of expected. However, there is obviously the possibility that after three attempts north, now with finally the US sort of kind of coming back on board through this session today, you might see some sort of rebalancing of that position, i.e., sort of people take a bit of profit. We'll see price push back down here. I think for me, the tell will be, should we get the push down over here? Should we find support through these areas here? So, say people that were sort of short didn't take the loss over here, they close out their positions, add to that buying pressure to push back up here. So I wouldn't probably be buying it at the highs here, even though it is sort of consolidating at the highs here. To me, it just seems a little bit just lackluster. We got the initial push, yes, okay, that we know that because of sort of like, the headlines and that kind of stuff. But the follow through has not sort of really shown what we've seen in the past when we've seen breakouts and things sort of continue up and sort of continue making higher highs sort of through that area there. So yeah, we'll see how we go. But it's still early days. I think sort of the tell will be around 12 o'clock when China opens. So we've got another hour and 14 minutes from that one there. Silver, similar kind of thing, didn't really sort of produce the same push as gold. So gold sort of made a fairly clear sort of new all-time high. Silver did technically, and into the end of the session, make a new. I suppose this was kind of a new all-time high, but only by a couple of points there as well. Again, look, what I mean, it is sort of consolidating up towards the highs here now. You can sort of maybe drag this up here a little bit. Look, I would want to see a clear break above 95 to say that, okay, yep, this breakout is holding on and we're going to go higher here. Any sort of pullbacks down here, do expect them to be bought at this sort of stage till you break some more sort of key levels. But at this stage, let's put this down over here. I think anything above 88, I think is just going to be bought up for now. Should you break down underneath 88, well, there's a different trade, and then we can sort of look for that there. But potentially a pullback here to reload and then maybe look for the breakout. I don't know if we're just necessarily after this sort of lackluster follow through, and immediately we kind of sold down here. Should you break down underneath 92.20, then I think that'll be your little sort of pullback area, and then you look down around maybe 90, 89, 90 or so for a bit of a reload. And then see what the market does there and see if they try to drive it out there a second time. Flip through these charts pretty quickly. We had Aussie sort of kick right back into life yesterday. So again, tariff, if we look at what the market's done in regards to tariffs and not so much the whole idea of the tariffs, but the uncertainty that the tariffs create, I think that's a better way to sort of put it, is the dump the US dollar. And we saw this last year. a lot of the time, and we saw markets come off, US dollar come off, golds move up. But this time, it's a little bit different. Well, actually, it wasn't any different. It was exactly what we expected. US dollar got dumped through the session, and then the crosses appreciated on that. So we saw the little gap down here. Aussie just bounced straight back and then pretty much just ran up all through the day. So this larger sort of descending triangle has kind of negated itself at the moment. I did a little video last night. I said, look, above sort of like, 67, 10, 67, 12, 13, this kind of area here, these highs, puts it on warning. And so that's where I kind of feel it is at the moment. I don't feel that this is necessarily giving us the mad breakout that people may expect. But again, if we see a push back down and we see maybe this sort of 67 area hold and then a push through, and we go through 67.30, I would say that's when you're saying, okay, yeah, well, you're going back up to test these highs over here. So, I wouldn't, again, be sort of buying the things straight off the bat, but for a continuation, that would be the kind of trade that you're looking for here. Here's the little grind that we've seen on a lower time frame. It has sort of broken through and sort of dribbling down here, but it's that time of the session where it's, you know what I mean, things can reverse very quickly with this sort of stuff. So we'll see how this sort of pans out again. I think it's sort of 12 o'clock will be the tell for us when we actually get a little bit more volume into the markets. Speaking of the dollar, we did see this thing sort of break and retest twice at the underside of this is the rising support that it used for that sort of big ascending triangle to get the breakout back test and couldn't push through for that high high. Now, it's in a bit of a precarious position at the moment. If you're looking at this in a bullish aspect, you'd say, hey, look, it's only at the 23% of the bounce lows. So, it is still within continuation, but obviously this was its pressure building for the momentum and it's failed. So it does open it up to the idea that we could potentially see a little bit more sort of stuffing around. Short term, I'd like to see 98.90 hold, but definitely would definitely want to see no lower than 98.70. I think 98.70 is kind of like its kill switch. I think underneath there, look, even though it's past the 38, then we've got a horizontal here which has played its part a number of times. You probably will get a reaction should price come back down under here. And the fact that it broke through this rising trend probably does open it up to the idea that it probably will get a little bit more punishment before it does anything. But as I said, short term, I'd like to see 98.90 hold, or thereabouts, this 98.94, whatever it is, this little support here, but certainly not below 98.70. Now, below 98.70, I think that's what you've got. Boom, here we go. And we can kind of look, again, if you're looking at a bear, where to come to just around the 61% retracement of its last sell down. So there's a possibility that we sort of hit a bit of a wall here. But again, news headlines and that can change these things at any moment. So that's what we've sort of definitely seen. Last couple of weeks in that, obviously, it's had a bunch of different headlines that could justify the push back down with the dollar. And so far, they've only managed to get it to the 23%. So, it's not a clear cut sort of thing that it's out at the moment. But I would sort of say that it's on a bit of a caution, at least for just a little bit of sort of potential small pullback to consolidation around this area here. But certainly, look, if it can find what it needs to get above 99.5, that's actually not only the fact that it's a higher high, that's very bullish. Because like we've seen with these sort of pullbacks through here, whether it was the Powell thing, whether it was, this is ISM, this was ADP, was a very small one here, NFP, these kind of things, they were the justifiable reasons for the dollar to completely roll over. But the market kept chugging through. And if we can chuck this latest Greenland/EU tariff debacle situation, crisis, whatever you want to call it, into the mix, and the market can still find a reason to take it higher, then I think that's actually quite bullish, because I think that even on top of that, say if then they say let's play the possible scenarios out, that gets resolved. We got Davos this week with the economic forum. We've got these sort of things like what's a sort of plan for the hope for the best, plan for the worst. Well, if they were to find some sort of middle ground which we know is how Trump sort of deals. Trump goes out all guns blazing. I'll ask for 500. Okay, you know what? Because I'm a nice guy, let's make it 250. I just picked out random numbers to emphasize the point. You know what I mean? It's still a positive move for him, but that's his tactic. You know, I mean, he's not completely original with that kind of tactic, but that is his tactic. And so by saying, "Hey, we're just going to take it," "Hey, you know what? We're going to buy it. We're going to buy it at all costs," all these kind of things. If they meet some sort of middle ground in which the EU don't feel completely sort of taken advantage of, even though it's just Denmark, it's not the whole EU. EU's trying to sort of show that they got teeth or something for some reason, but even if they find something that appeases them, and also Trump kind of gets what he wants out of it, that's seen as a positive situation. Trump still gets what he wants. The EU don't have to do their bazooka response in um, tariffs. Well, that's going to see the dollar push up. And these are the things it's not necessarily that, like, because that's not the current state of play. But as we know, with so many moving parts and so many situations, we got Iran, we got Greenland, we got in the very, very background now, Gaza, we got Powell with the sort of thing, we got the tariffs, the legality of the tariffs coming in. I mean, we've also got that. What happens when they sort of come out and say, hey, hold on, wait, the tariffs are not legal? You know what I mean? Like these sort of things can really sort of just turn the market in 2 seconds. So yeah. Anyway, enough of the sort of rabbiting on with it all. But the point is that at the moment it's at the 23%. It's still in the realm of sort of basically where it could just be consolidating these highs over here. That story kind of dies should you go underneath 98.60. Underneath 98.60, I think we see the dollar push back down. I think we see everything push on to new levels. So we'll have to sort of keep a close eye on that. But yeah, top side 99.3 again, as we've seen. You want to see if they come up. Excuse me. If they come up and test this again and they reject this again, that's probably not looking so good for the dollar. But while it's kind of between these two levels, well, actually between 99.5 and 98.7, I think it's realistically got either direction for this to really play out. So I'm going to put that down here, put a direction on this, and put a direction on that. I think that's just kind of main levels where we're going to see the next big move from the dollar. So it's still got the ability to come down a little bit lower without being dead. It certainly has work to be done to get it back up above the highs, but should it break above the highs, I do think that's quite bullish for it. And moving along, finally, just AJ, look, it's about to hit price target for that sort of bear flag movement. It's in a really sort of odd position here because it's back up above this previous rising support. It's broken through this falling resistance, so it's seen as bullish, but it is coming into this horizontal. So it's a bit of a tough call with this one here. 106, the round number, it obviously dipped down here underneath, just a little push underneath here, push back up over here. So a little 30-point range it built up over here last time. I think if this thing gets back down underneath, like despite the cross things of it all, so through this falling resistance, back up above this rising support, I still think that this is potential for a trade if we get back down underneath 106. I think that's kind of, we can expect almost a bit of a dribble back down over here. As to sort of where the price target would be with this, it's a bit tough to call, but I think this larger wedge break is probably more significant than this shorter term channel that's broken out of. But I certainly at the moment think this horizontal's the playing card. So if I put it on the 4 hour, you can probably see a bit better here. It was a support before it broke down, retested, a couple of points above, back up, retesting here again. And I think a 106, which takes you underneath this 4 hour wick, I think should give it a pretty good idea to sort of roll over and then sort of head back down towards these lower levels, 105.50, 105.16 for the sort of downside targets in the sort of short term. All right, quick look at what we have in terms of data. I think it's pretty quiet week, and we had we had Canadian CPI overnight, came in a little bit cooler on the medium one there. Came a little bit cooler all over actually. Um, Apart from that, it's not really too much. We've got a bit of Chinese data looking to be fairly flat over here. The yuan's been very, very strong, actually, ever since April. It's just been pretty much one-way traffic for it all. I kind of stopped marking it out so much just because it is just been such one-way trades. But yeah, we'll see how we go in that once we sort of get back. So probably more stuck back into the year. Apart from that, not really a lot on the sort of data front of that. We do have, as I said, Davos sort of kicking off at the moment. So I'll just be looking up at headlines that sort of come out there, but that won't be through Asia. All right, that's it from me.